From the land that brought us Demokratis, or democracy, a new coalition government has been formed. That's right, overnight a new Greek government was sworn in, and one of the first things on the agenda is rolling back some of the more bitterly contested austerity measures, in particular pension cuts. Some good news too in terms of Spain and Italy. It's been mooted that some of the EU bailout money should be used to buy bonds of those countries in order to keep the interest rates down, and as a result bond rates did actually dip. From the US, however, some not so good news. There was general dissatisfaction that the Federal Reserve quantitative easing measures don't go far enough, and that did have a small impact on US markets overnight. So looking at those markets, the Dow was down slightly, around 13 points. However, most European equity markets were up. Looking at the currency, it was pretty much risk-off for the Kiwi, which fell against most of its major trading counterparts. Over the last couple of months, I've talked a lot about how demand out of developing nations is likely to drive prices on world agricultural markets. The United Nations Food and Agricultural Organization estimates that by 2050, around 70% more food is going to be needed to be produced to feed the masses. That's around 1 billion tonnes more of cereal and 200 million tonnes of meat. Looking at dairy, there's some very interesting statistics about consumption of dairy. According to the FAO, in 2012, around 106 kilos of dairy products are going to be consumed by every man, woman and child in the world. However, that's an average and it hides an interesting fact. According to the FAO, developing nations are going to consume around 238 kilos of dairy products per person, as opposed to developing nations, which are only going to consume around 71 kilos per person. That shows a significant potential in terms of the market and also the significant potential for New Zealand's agriculture.